What if Calgary's real estate market starts falling? If you've bought a home in the last year or you're thinking about buying, you've probably wondered, what if I'm buying at the peak? Or how much will prices actually go down from here? These are valid concerns. Because the truth is, this market has changed fast. The price of detached homes in Calgary has surged. Interest rates remain high compared to just a few years ago, and now new economic challenges are emerging, from inflation and global instability to the impact of US tariffs on Canada's economy. Even many investors are holding back, waiting to see what happens. And honestly, I don't blame them. Today, I'm going to walk you through what's happening in Calgary's market right now, the real risks of buying in today's economy, how home prices have reacted in past downturns, and why, if you have a long-term mindset, history shows us that you may not need to worry as much as you think. But first, my name is Dawn, and you know what's crazy? 84% of you now watching aren't subscribed. If you find any value in my videos, please consider subscribing. It would really help me get them out there and grow this channel. In return, I will continue to show up making my videos that I hope you find valuable. My goal this year is 1,000 subscribers, and your support means a lot. If you're wondering about buying in this market, I want you to know, you're not crazy. Right now, a lot of people are pressing pause. And honestly, I don't blame them. There are a lot of moving parts in the economy that make it feel risky to buy real estate. The big question is, should I wait until things feel more stable? And while no one has a crystal ball, here's what we do know about the current economic uncertainties. Prices have risen quickly. Homes in Calgary have gone up tens of thousands of dollars in a short time, and many are wondering, how much higher can they go? My opinion is I think we've seen the end to the significant increases of the past few years, and we'll likely see a more stable market for now. Maybe slight increases, but of course that really depends on our economy. So hold that thought. Yes, interest rates are still higher than what we saw a few years ago. The good news is they're starting to come down, good and bad. This is giving a lot of buyers hope that affordability will improve and that we might be able to lock in a better rate in the near future. And that's true to an extent. But let's be real about why rates are declining. The Bank of Canada isn't lowering rates because everything is thriving. It's doing it because the economy is struggling. Lowering rates is a way to stimulate growth, to encourage spending and investment when things start to slow down too much. So while declining rates might help make mortgages more affordable, they also signal that the economy needs support. And that's something to keep an eye on, because if rates drop too aggressively, it could be a sign that things aren't as stable as we'd like them to be. One of the biggest concerns right now is the 25% US tariffs on Canadian goods, with oil possibly seeing the lower 10% tariff. And while the final impact remains to be seen, there is a very real possibility that this could push Canada into a recession by mid-2025. It's going to be very hard to avoid that. If these tariffs stick, it could mean a weaker energy sector. If oil is hit with the 10% tariff, our exports become less competitive, which could lead to lower prices and job losses in Alberta. Canadian businesses that rely on exports will take a hit, and in response, some could cut spending, hiring, or even relocate. Retaliatory tariffs from Canada might feel like the right move politically, but in reality, it would only worsen the problem. Tariffs could actually lead to higher inflation. If that happens, the Bank of Canada's job gets even harder. Think about it. If inflation starts rising again while the economy is shrinking, we're stuck between two bad choices: lowering the rates to help the economy but risk fueling inflation, or keep rates high to fight inflation but make the slowdown even worse. Either way, it's a messy situation. So what does this mean for real estate? If job losses increase, demand for housing could slow. Buyers might hesitate, waiting for economic stability. The Bank of Canada could be forced to adjust rates unpredictably, making it harder for buyers and sellers to plan ahead. For now, all we can do is take it day by day. We've seen downturns before, and Calgary's market has always found a way through. But this is something we need to be watching closely. Calgary's real estate market has been through uncertainty before. Yes, we've seen oil crashes, recessions, global financial crisis, and every time the market has cycled through, adjusted, and moved forward. Over the past few years, Calgary saw a huge increase in investor activity. People were buying up homes to rent, flip, or hold as long-term investments, but now a lot of them have paused. Smart investors watch the market carefully and make moves when they feel confident in future returns. And right now, some are just waiting to see what happens with interest rates before locking in financing. Some are worried about tariffs and how they could impact Alberta's economy. Some are just sitting on cash, knowing that if prices drop, they'll be ready to buy when others are nervous. This shift in investor confidence is important because investors play a big role in driving demand. If they continue holding back, we could see less competition for homes, more opportunities for first-time buyers, sellers having to price more aggressively to attract buyers. But again, this won't last forever. That's why my approach isn't to pause completely, but to move forward strategically. I'm still watching the market, and if the timing is right, I plan to buy an investment property this summer. If all of this is making you nervous about making a move, I completely understand. Here's the thing. This isn't the first time people in Calgary have worried about buying at the peak. Let's go back to 2013. Home prices were high, the market was hot, and buyers felt pressured to get in before it was too late. And then the oil crash hit. Prices dropped. For those who bought in 2013 to 2014, it felt like they had made a huge mistake. Now, let me share a little personal insight with you because I've been exactly where some of you are right now. I bought a detached home in 2013 for $496,000, and at the time it felt like a great decision. But then just 2 years later, the oil crash hit. By 2015, our home had dropped in value to $470,000, and for years, it just sat there. By 2017, still no change. Our home was stuck at $470,000, and at that point, I remember thinking, did we buy at the wrong time? Are we ever going to see this value come back? Finally, 2019, we were just breaking even. 6 years later, and we were right back where we started. And then the COVID real estate boom happened. Between 2020 and 2024, our home's value surged past $700,000. And even now in 2025, as the market slows, it's sitting around $750,000. Now, I'll be the first to say our home is a little unique. There are certain aspects of it that held its value a bit better than some comparable homes in the area. Not every home follows this exact pattern. Not every property in every market always recovers. But the takeaway here is, if I had sold when prices were down, I would have taken a loss. Instead, we held, we kept making our mortgage payments, we kept living in our home, and now, more than a decade later, we're seeing the long-term gains. And this is why I say real estate is a long game. If you can hold through the dips, if you're not forced to sell in a downturn, then time, more often than not, works in your favor. But even now, with home values up significantly, selling to cash in on equity doesn't necessarily mean you're coming out ahead, because unless you're leaving the market entirely, you're also buying at today's higher prices. In many cases, it's a wash. Now, looking back at my own experience, there are a few big lessons we can take from this. Lesson number one, Calgary's market is cyclical. If you've been watching real estate for any length of time, you've probably noticed Calgary doesn't have a straight line market. It moves in cycles. We've seen booms, 2004 to 2007, 2012 to 2014, and the wild ride from 2020 through to early 2024. And we've seen busts. 2008 during the financial crisis, and again in 2015 to 2016 when the oil crash hit Alberta hard. So if things feel uncertain right now, just remember, we've been here before and we will be here again. Lesson number two, long-term holding is key. Those who sold in 2016 when the market was down, many took a loss. And sometimes you don't have a choice. Life happens, right? Job relocation, financial hardship, family needs. You have to do what is best for your situation. And if that means selling at a loss, it sucks. But those who were able to hold on to their properties, they're now sitting on significant equity. And that brings me to the biggest takeaway. Lesson number three, diamond hands win in real estate. Now, if you haven't heard that phrase before, it means you have a high tolerance, a high risk tolerance. But really it means you won't panic and sell off your holdings during price fluctuations. Real estate isn't like the stock market. You don't get daily price updates, and you don't need to stress over short-term fluctuations. You just keep paying your mortgage, living in your home, and over time, the market does what it does. If you've bought in the last year and are feeling anxious, take a breath. Short-term dips are possible, but real estate is a long-term game. If you're still wanting to buy but feeling hesitant, ask yourself, am I buying for the next 5 to 10 years or just the next 1 to 2? Am I in a position to afford my mortgage even if the market slows? Can I hold on to this property through market fluctuations? Because if history tells us anything, it's that time in the market beats timing the market. Are you feeling hesitant about buying right now? Or maybe you've already bought and you are feeling uneasy about where the market is heading. If so, you're not alone. I feel it too. The truth is, none of us know exactly how these tariffs will affect the real estate market. Sure, we can make an educated guess, but at this point, it is still speculation at best. That's why we have to take things day by day. It's easy to get caught up in the what ifs, but I remind myself that worrying won't change the outcome. For me, I choose not to punish myself twice, I call it. I can stress about potential challenges now, even though they may not happen, or if they do happen, I end up experiencing all that stress leading up to it and the actual impact. But if they don't turn out the way I feared, then I've spent all that energy worrying for nothing. That's why my plan is to keep moving forward, carefully, but confidently. I'll continue watching the market, and as I said, if the timing is right, I plan to purchase an investment property this summer. I'll make sure to keep you guys filled in on how that plays out. If you've already bought, now is the time to button down the hatches. Limit spending, build up your reserves, and do what you can to weather the storm that's coming. This isn't about ignoring the short-term risks. They're real. And if you're thinking about buying in 2025 but don't have a solid, secure job, I'd think twice. Whatever your plans are, whether you're buying, selling, or just waiting it out, I hope you find clarity in your decision making. Stay informed, make smart choices, and focus on what works for your situation. Real estate has always been a game of patience and resilience. I'm always here if you have any questions. Thanks for watching, and I'll see you soon.